So I'm going to do a bit more of an in-depth analysis in this video just because I'm aware that I'm on a bit of a losing streak at the moment, and I want you guys to understand that there is always heavy analysis done behind my trade setups based on probability, market data, past market data, statistical and empirical data, and also what the financial institutions actually trade, because that is what my trading strategy is. My supply and demand strategy is based on how the banks will trade, and it's evident to see that as well in the market, and I'll explain that in a second. And that is why there is always so much validation behind the trade setups that I take, because I will look for these specific factors that allow me to know that I'm trading with the banks or I'm trading alongside the institutions, and that there's validity to my setups and the reasoning behind it. So we're gonna slow down the analysis and try and explain it clearly today, and that's what I'm gonna do for you here. So the financial institutions, they love to sell at a premium level, a premium price, and they love to buy at a discounted price, right? So they either buy for cheap or they sell for expensive. So when we look at premium and discount, it's 50-50 from a swing high and a swing low. So we're on the 4 hour here, and we're gonna draw our 50-50, so this is called equilibrium, from our swing high to our swing low down here. And we can see that there was strong selling power once the premium got mitigated. So we can see price came up into this premium area, right? So the top 50%, and then started to see selling power, okay? So when we scale down, we see that on the lower time frame we've got change of character. So we can see once we mitigated this, I'll redraw it. Once we mitigated the premium level, okay, we started to see all of the selling power, and then we got this change of character to the downside here. So we started to make a lower low, and we started to make lower highs, okay? So this is our change of character, and you can see that this high here did not break this high over here, and instead this low here has been broken, right? So we're obviously now bearish. This is our breaker structure. So we are continuing to the downside. So what are we expecting? Well, we're expecting to continue this 4 hour bearish trend. So we want to eventually be breaking this structure here. So when we scale down again, well, we know that for banks to place their orders, okay, for example, they could have 10,000 lot size order. They need liquidity. You probably most likely already know what a liquidity sweep is or a liquidity purge is and the reason behind it, but if you don't, I'm going to explain. So here we have our what's called liquidity. Here can either be resting stop losses or resting take profits, but regardless, once these highs have been mitigated and prices come up to these highs, people have either been stopped out of their order or they've had their profit taken. So regardless, their orders have been closed. So this allows the banks and the institutions to get filled on all of their orders, because there are now more available lots at this price level, okay? So price comes up here, the market is trying to sell in a bearish market, takes out liquidity, so now there's more lots for selling, for sell orders, which price, when I say price, the banks can then get filled on, and then you see this huge volume to the downside here. And like I said earlier, the markets are fractal, so price will repeat this on every single time frame. So now, what we did on the 4 hour was we drew our equilibrium from the swing high to the swing low, and we're going to do the same thing here. So we got this breaker structure to the downside, confirming our bearish bias, right? So now we want to draw that same discount and premium indicator from the swing high to the swing low, which we can see is over here, right? And once again, price came up into the premium I'm just going to do this one. Came up into the premium area, swept this liquidity, mitigated this 1 hour supply zone, and then showed huge volume to the downside, right? So clearly it's found a good price to start selling at, and it's found liquidity to then fill its orders, and now it's selling off to the downside. So this process was repeated multiple times, okay? So when we go down again onto the 15-minute time frame, we got this change of character. So we broke below this low and we held below, and we've continued now to get to break below all of these as well, okay? So you can even call this a change if you wanted. You can call this your change of character right there, and price is continuing to break structure, right? It's continuing to take out the prior low and hold the prior highs. So we broke this low, gave a break structure, and we're holding this high right now, and price then broke this low again here. So you can see that on every single time frame. So now we know that we are starting to go bearish again. We do the same thing on the lower time frame. Because price is going to come back and it wants to get filled in at the best price possible, so it can continue its trade in profits. Okay, so we do this again. Let's say this was the bottom of the swing low. Price can obviously come down a bit further before, but we see this is our premium area where the market will want to sell because it's at the best price possible, and so it can hold its previous trades here in profit and keep going down to whichever level they want to take their profits at, which we know on a higher time frame is at this breaker structure, because price on the higher time frame has already given a change of character to the downside and started a bearish market. Okay, I hope this is all clear so far. So once again, let's say that this is our now lowest point of this swing low on the 15-minute. We know now that price wants to start selling at a better area, so a premium level. So price will come up above this equilibrium and search for some kind of area to sell off of, which will be our supply zones, in order to then keep selling off to the downside and keep its position in profit. Price will not want the market to come above here, because this is where they got filled in and they don't want to be in negative. Who does want to be in negative, right? So they will try and fill their orders here to keep in profit and keep selling off to the downside until they see fit to take their profits as well. Which is why you have to then identify demand zones. For example, this is a very strong demand zone. You can see we had a lot of buying power here, and that could be due to a mitigation of a prior demand zone where the market also started selling, and we saw all of this volume over here. So this is an area that you want to look at to take profits as well, because also we have resting liquidity here, and the market will use this liquidity, take it out to then fill their orders at this demand zone, which makes this a very high probability demand zone for buys. So that is going to be one of the areas that we want to target for our take profit. And then if price wants to keep selling off this further for our break structure here. So I hope that that has given you enough information behind my trades and understanding the markets and the way they move, and why you want to move with the markets, and understanding that trading with the banks is, you know, you want to be trading with the banks. That's where all the money is, that's where all of the volume is and the momentum. Okay, so anyway, this is what I'm looking at on the Canadian dollar against the Swiss franc. Because on this 30-minute we have this high volume supply zone which purged liquidity and then sold off to the downside, okay, with this strong sell side candle we see here, and an area of imbalance, which again just means that this is where price kept getting filled on its supply orders, because there was not enough demand to retrace, so price was still pushing down because there needs to be enough demand to fill all of its supply orders, and that is what we see here. So price will most likely come to fill in this area to then fill the rest of its order if the market hasn't already, if the banks haven't already filled their whole position size, then they'll come up here and that's where they'll sell off from. So if you didn't already know the majority of this information, hopefully that's given you a bit more insight into the market. I myself learned this very recently, so it's something that I implement into my own trading. And yeah, so that is the trade that I'm looking at for today, and that is also a bit of information that you can take with you and maybe apply it to your trades, using the indicator here, equilibrium, which you can use from the Fibonacci tool, and you can just change it to be a 50-50 here. But it's very useful, and that's going to tell you why there's momentum when sellers are coming into the market, buyers coming into the market, how to pair it with change of characters, etc. How to link up as many time frames as possible, so you're catching, for example, 4-hour supply zone, then you're scaling down, catching a 1-hour supply zone, scaling down even more to 15-minute, etc. And how you can increase your win rate and how you can increase your profitability. So yeah, that's it from me. Hopefully that was helpful. Let me know if you want to see more videos like this. I'm always trying to learn more about the market as well myself. So I'll be doing some more research. So yeah, hopefully this was an interesting video for you guys.